The only time you pay taxes is when you sell it. And so if you don't sell ever, instead you get yield on it, well, that's always a good way to go about it.
We just did our first couple deals, Ethereum and Bitcoin mainly, both about 12.5 million under management now, deferring millions of dollars of capital gains tax. We're working on one right now that's an NFT sale. And it's artwork that's physical art, but also becoming they're making an NFT, and I'm tens of millions of dollars worth of value, and they're looking to exit with us. But that's typically the biggest frustration, Douglas, is this capital gains tax for a lot of people who want to exit, or how do they navigate that? So without giving up your U.S. citizenship or moving to Puerto Rico, right? I'm curious what strategies or thoughts have you explored to defer capital gains tax on the exit of crypto?
I'd say that the whales that I know don't actually exit ever. And so they stack, and then what they do is they stake. And when you stake, you actually, you still own it, but you lock it up for a period of time and you get paid a yield. And there's a lot of different institutions that offer you a yield on what you have. Now you'd pay tax on the yield that you earn. There's a 1099 form that comes out for that. But you don't end up actually selling. So if you bought Bitcoin at $400 and now it's trading there at what, 44,000 today, rather than selling it, instead you would stake it. And I know this doesn't help your business, but the only time you pay taxes is when you sell it. And so if you don't sell ever, instead you get yield on it, well, that's always a good way to go about it. And that's what I see certainly base.
Point there, right? Which is staking and stacking. I'm curious on the staking part, because I have heard this, and this is cool. And then I'm going to throw another idea at you to see what you think about this. But what happens if you stake, let's just say you have $10 million of Ethereum or Bitcoin, and you stake it, and the value of Bitcoin when you staked it was 68,000 a coin, and then it drops to 35,000 a coin. Are you subject to margin calls? Are you subject to, yield changes?
Sure.
Like what happens in that scenario?
Yeah, if I have $60,000 worth of Bitcoin and I put it in and they're paying me 6%, and the price of Bitcoin goes down to $30,000, I'm still getting 6%, but I'm getting 6% on $30,000. And the way that most of these staking firms work is you get paid out on a daily or on a weekly or on a monthly basis. And so it's always going to be based upon, what's the dollar value that's sitting there. Or they'll pay you out 6% of whatever you put down in Bitcoin, but you're getting paid in Bitcoin. And so regardless of where the Bitcoin value is in the market, you're still getting 6% of your one Bitcoin. It's just going to be worth less. And so that's how folks look at it on the staking side.
Okay, that's really good.